KVB PRIME, developed for global traders, growing together with you.
Okay, welcome to this week's weekly market commentary. Before we're able to start our content today, we have to let you read the risk disclaimer. The content contained here does not construe any form of the advice, and the user must not take this as such. We do not accept any liability for the direct or indirect usage of the content here in the article. We strongly advise that you obtain independent financial, legal, and tax advices before proceeding with any currency or spot metal trades. Okay, now let's get back to our main topic for this week. First part, we will have a weekly recap from different content. Now, first, we are talking about the US. Consumer prices fall for a third month in May. According to the Labor Department, the US Consumer Price Index, the CPI dropped 1% last month after falling 0.8% in April. That was the biggest since 2008. It is also the third straight month's decline as demand remained subdued amid the economic downturn caused by COVID-19 outbreaks. The core CPI also dropped 0.1% in May after a 0.4% decrease in April. These figures could raise concern about the deflation risk in the US and increasing prices with the recovery in the demand for goods and services amid the states reopen. Second, the Fed pledged to maintain zero rate through 2022. After the FOMC meeting this week, the Federal Reserve pledged to keep a buying balance and expect the interest rate will remain near zero through 2020. Chairman Powell promised to help with the economy recover from COVID-19 crisis by using all possible tools. The bank also set a minimum for its asset purchase, with taking in at least 80 billion in treasury and 40 billion worth of mortgage-backed security monthly. Third, another 1.5 million Americans filed for jobless claim. On Thursday, the latest data from the Labor Department showed that around 1.54 million Americans filed new state unemployment claims in the weeks ended June the 6th. Down from 1.9 million in the prior week, which is the lowest number since the COVID-19 crisis started, but still well above the normal level. Fourth, US producer prices jumped more than expected. According to the Labor Department, the US Producer Prices Index, PPI, rebounded 0.4% last month from descending and 1.3% in April, better than a forecast of 0.1% gained. The main factor of this CPI increase is in surge in mean prices with 40% boost last month. Okay, let's get back to other zone, Eurozone, Australasian, and Asia. Germany's industry production dropped sharply in April due to the coronavirus lockdown in the country, fell by 17.9% from the previous month compared to the expectation of -16%. German Statistics Office described the drop as the largest decline since the beginning of the term since the January 1991. The government eased restriction tentatively on 20th April by allowing smaller retailers and car dealerships to reopen. Further lockdowns will be lifted from 15th of June, including relaxing travel ban between European countries. Economists believe the lifting of the lockdown is likely to help with the economic recovery. Next one, Bank of Spain expects the economy contraction as much as 15% this year. According to Bank of Spain, its economic could shrink by as much as 15% in 2020 as a worst-case scenario, which may be the steepest contraction in the European zone. Spain has implemented one of the strict coronavirus restrictions, and it is the country that heavily depends on tourism, thus particularly exposed itself to the damage by the global pandemic. Australia NAB business confidence rise to -20 points in May. According to the NAB monthly business survey, Australia's business confidence recovered to a net balance of -20 in May, up from -45 in April. Business conditions also increased from -24 from 34 in April. numbers suggest that business activity remain weak in May, and forward indicators like capital expenditure and capital utilization also remain depressed. New Zealand. New Zealand's ANZ business confidence improved in June. New Zealand's business confidence recovered slightly to minus 33 in June from minus 41.8 in May. A preliminary reading of ANZ Bank survey showed the improvement reflected the New Zealand's eased lockdown. However, the hardest hit sector like accommodation, hospitality, and retail are still not yet recovered, which leaves the employment rate high. Okay, let's focus on China. China's May factory deflation deepened and the consumer prices growth slowed. Chinese May producing prices index dropped to 3.7% from April's 3.1%, compared with the expectation of 3.2%. The National Bureau of the Statistics said on Wednesday. The CPI increased by 2.4% in May, followed by 3.3% gain in April, but missed the expectation of 2.7% increase. These depressed figures indicated demand in the world's second largest economy remains weak, although the government recently have encountered consumption and exports. Lastly, Japan. Japan average cash earnings for 0.6% in April, the first decline in nearly 4 months. The latest data released on Tuesday showed that the average cash earning in Japan fell 0.6% in April from the a year earlier, beating expectation of a negative 1.0%. In addition, extra hours worked reduced to 18.9%. Restaurant and service sector being hit the hardest, with the overtime payment down 46.1%. Okay, now that's enough for the market recap for first parts. Let's have a look the major asset intraday analysis, also the focus for the whole weeks, and that will be exciting. Now, first of all, let's talk about US dollar. The last week, US dollar recovered. After falling for 2 consecutive weeks, falling to the lowest level in 4 months, US dollar index finally got a chance to rebound. Although the counter rebound is weak, has begun to enter a consolidation phase. At least it is protected US dollar index from continuing to decline. The focus this week will be on how much US dollar index will rise. If the market activity participates, it is likely to return to prices above at 98. Okay, let's have a look Eurozone and talk about Euro. The trend of the Euro last week is more conservative than the previous 2 weeks, weakening the momentums of increasing, and there has been a certain degree of shock. If the Euro falls below the support level below 1.1232 this week, and it jumps out of the shock range, there will be a lot of market shorts. On the contrary, in if the Euro can return to the valley in early June, the resistance above 1.3346 will be quickly broken through, helping the Euro to reach a new high. Let's talk about sterling. The pound was severely affected by American dollar last week, and after sharp fall, it rebounded and rose, aiming at a front high of 1.2773. However, with the continued recovery of US dollar index, the resistance is strong and it is difficult to return to the high price of dollar index decline. Compared with the resistance above, participants needed to pay attention to decline of the pound. The hourly level of the lower line is slightly weak. A wave of the decline in the next few days is inevitable, probably. Let's talk about the last one, is the gold. Last week, gold experienced the longest recent upswing and then began to fluctuate upwards to the highest price level in June. In an environment in which the US dollar index rebounds, other currencies have declined to varying degrees. As a result, the rise in demand for gold has led to price increase. In general, the slight fluctuation of gold on the daily line will not affect its status of remaining at its highest level in 3 months. This week's focus is still on the impact of the new high of 1765. That's all we need to share as the second part of the major currencies trading for forecast for this week. And we will see you next time in our program.